few months ago, I decided to delete every single indicator off my charts. No RSI, no MACD, no moving averages, just clean price action. And it has completely changed the way I trade, because for a long time I wanted a magic indicator that was going to tell me when to buy and sell. But the more I used them, the more I realized that they were lagging because they react to price, they don't predict it. So after trying multiple indicators, I decided to strip everything away and just focus on price action. And it's the best thing I've ever done. So I started focusing on two time frames, the hourly chart and the 1 minute. The hourly is for structure and direction, and then the 1 minute is for execution and precision. And that combination became my whole strategy. 1 hour for overall bias and 1 minute for entries. And this is exactly how I trade now. So I'm currently doing a 5k FundedNext challenge. Today is Friday the 7th of November and I have taken 2 trades. So if we look at those 2 trades and exactly why I took them, and these trades were taken just focusing on price action, no indicators. So what I'm looking at here is the hourly chart. Now I come to the markets at 6 a.m. UK time. I trade the 6 a.m, 7 a.m, and 8 a.m. hourly candles. So when I got to the markets this morning, I could see that from 5 till 6 we had closed bullish. So we can see that there. We have got a top wick rejection, but we did have a bullish candle. And this is after we've pushed bearish for 5 hours. So because of this bullish candle, I was looking to buy if we got the right price action on the 1 minute. Now from a 1 minute perspective, I can see that price is making lower lows and lower highs. This is exactly what I want to see. I want to see sellers have the opportunity to push price down. Now sellers have pushed this price down just before the 6 till 7 hourly candle opens. We can see we have this low. We come up and make a new lower high. Now under usual circumstances, what's going to happen is price is going to come back up to make this lower high. It's then going to violate the previous lower low, come back up to make a lower high, and just continue in a downtrend like this. Now the way I just trade price action with no indicators is I'm looking at this low. Now if price can't come down and violate this low and we then break the previous lower high that price had created, there's a chance that price is now shifting to start pushing bullish again in line with the previous hourly candle close. So the theory is the previous hourly candle has closed bullish. We are looking to buy during the new hourly candle. Now obviously there's a couple of nuances to that. If price is pushing into an area of rejection, I wouldn't necessarily be looking to buy. So once we have this bullish candle here, even though the theory is we've got a bullish candle, we have to buy the next bullish candle. If we're pushing into an area of rejection on the hourly chart, I'm not going to be buying that. Or if we have a huge bullish candle like this is most likely news inflicted. I'm not going to be trading after such a big bullish candle, because the chances are the price has exhausted after pushing up this much for an hour. If we compare this to the other average range candles, we don't want to be buying after a candle this big, because the chances are that buyers are going to exhaust after pushing price up so much compared to the previous average range candles. But apart from those 2 nuances, there's no reason why if price closes bullish, we can't continue up, especially from an hourly perspective where we could continue all the way up to around here before potentially rejecting. So once we've got this bullish close, I'm definitely looking for buys, depending on, from a 1 minute perspective, if we can not violate this low and break the previous lower high. So this is what I was looking at this morning, and when the new 6 o'clock candle opens, I see that price pretty much immediately breaks that previous high. So the 6 a.m. candle opens here. Price has not violated this low. It's then broken above the previous lower high. So this is the high that price created. And then when the 6 o'clock candle opened, we entered a buy position based off the theory that price has tried to push down, failed. It's then created a new higher low. So this is the shift from bearish momentum into bullish. If we can't break the previous low, we come back up and break the previous lower high. We're in line with the previous hourly candle, which was bullish. We're also bullish on the current hourly candle that we are trading, which is something that is important for me. I like to see price currently be in my direction before entering the trade. And you can see that by the time we entered this trade, we were bullish. So if we skip forward a few bars here, you can see that price did actually come down and stop us out. So that was a loss that we took this morning. Now, obviously there's going to be losing trades with this strategy. There's going to be losing trades with every strategy out there. I'm not worried about losing trades as long as I did everything that I was supposed to do, which on this occasion I did. So if we go through the trading rules here of the strategy, the previous 1 hour candle for direction, 1 minute shift for execution, that's exactly what we used. We were buying based off the previous hourly candle. The current 1 hour is in line with the previous hour. It was, by the time we entered, we were bullish on the current hourly candle. It was the first shift after price has tried to push down. So we had this bearish price action. We shifted into bullish. So that rule was ticked. The entry was close to the flip of the current hourly candle. So what we want to see is when price is just flipping into our direction, which is where we got into the trade, we're getting into the trade really low down on the candle, which means that we've got potential to push all the way back up to here. Like I say, I don't want to be taking trades where price has already pushed a lot on the current hourly candle, simply because, like I said earlier about the average range of each candle, if we're already all the way up here and on average price is pushing around the same amount per hourly candle, then what are the chances of us buying all the way up here and price continuing further? It's less likely than if we're just getting into a trade as price is flipping into our direction, which we were. So that's ticked as well. 2 trades per session. Yes, I took this one and then I took one this afternoon. So that is ticked. Minimum 2.5 pip stop loss and a maximum of 10. Yes, entry criteria would have been 2R, but obviously we didn't get there. So after trading the 6 a.m. candle and I took that loser, I didn't see anything else at the 7 a.m. or 8 a.m. candle closes either. Otherwise I would have taken that. I'm taking 2 trades per session and I see London session as from 6 till 8. Then I don't take anything personally between 8 a.m. and 12 p.m. I come back at 12 and I trade the New York session, which is from 12 up until 3. So in my current rule book, I have 2 trades per session and I'd only taken 1 in London. So I was looking for another trade here in the afternoon. So I got back to the charts at 12 and I can see from 11 till 12 we have this bullish candle. So I was looking to buy purely off price action, no indicators, nothing like that, just simply this candle is bullish. It's not too big, it's a nice size. We can probably continue bullish up to around here, I would have thought. And when I marked this out, I could get break even before potentially getting into this area and rejecting. So I was happy to take the buy, knowing that I could get break even at 1.5 before we hit this area of rejection on the 1 hour chart. So when a 12 o'clock candle opened, which is there, we can see that the last few minutes of the 11 o'clock candle, we start to push down and we have these lower lows and lower highs, which is exactly what we're looking for, giving sellers an opportunity to push price down. If they're not strong enough for price to continue down past this low, so this low here, we come back up to make a new lower high. Now, if sellers truly are in control, they would push price through here and price would continue down. If they're unable to push price past this low and we then break the lower high, there's a chance, obviously it might not happen, but there is a chance that price may continue in the same direction that we've just pushed for an hour. It is a continuation trade. So previous hourly bullish, we're expecting the next hourly to also be bullish. Now in terms of price action, I don't see wicks as a break below. As long as bodies of candles don't break below this low, then we can still take this trade, because price does try to push down here and fails, leaving this wick behind. And if we look at where the body of this candle has closed, it has closed higher than this previous low, meaning that we get the higher low that we are looking for, because we can see that there. Price made this low, come back up to make a new lower high, comes down, tries to push further, but fails, comes back up, leaving that wick behind, leaving this higher low shift, which is exactly what we're looking for. On the hourly chart, we can see that if we break above this high, then we will be bullish on the current hourly candle that we are trading. So all I did was I had a market execution ready to go, 3.5 pip stop loss. So I worked out on the stop loss calculator how much I should be risking to risk 0.5% for this trade. I'm currently trading 0.5 on the FundedNext challenge, and we can see exactly what happens here. So price still respects this area, so this is still respecting a higher low. We then break above the high, which is where we enter the trade. And then all I'm doing then is I'm waiting to see if we can get at least 1.5 where we go break even. And you can see that price pushed up. We went break even at 1.5 and we pushed all the way up for our 1 to 2 target. So with this one, previous hourly candle for direction, 1 minute for execution, current hourly in line with the previous hourly, which it was. First shift, which it was. After the bearish price action, price failed to break below, shifted and then broke a high. Entry close to flip, which it was. 2 trades per session, yes. Minimum 2.5 pip stop loss, this was 3.5, and our exit criteria was 2R. So all of the rules followed on that trade. Now personally, once I took that trade, I was out for the day. So I'd had 1 winner, 1 loser, and I did end the day profitably. But I was still keeping an eye on GU just for the rest of the afternoon to see if anything else lined up. It didn't matter if something lined up that I didn't get part of, because I was more than happy to take the profit of the day, especially after starting the day with a loser and just walking away for the rest of the day. So that's what I did. But I did see this trade happen at 2 p.m. So if we look here from 1 till 2, we have closed bullish. In my opinion, we may be able to continue bullish back up to around here. During the 1 till 2 candle, we start pushing bearish, which is exactly what we want to see. We then create this low at 154. So when the 2 till 3 candle opens, which is here, we'll be looking to buy based off the previous hourly candle. We have the lower lows, lower highs, failed to break this low. Again, we've got wicks, which is what we like to see. It's where prices tried to push down and failed. So once we shift from pushing lower lows, lower highs, failure to break the low, we then break above this previous lower high. Stop loss would have to be a little bit bigger at around 6.5 pips, but we can see that price just continues up, and we would have got a 1 to 2 on that one as well. Again, I didn't take this trade because I was happy to walk away. I just wanted to show you that there's no reason to be using indicators when, what could indicators possibly tell us here that we can't already see? Purely based on price action, what would we need from an indicator to tell us? There's no reason to be putting indicators on this chart. We've got everything we need just based on price action. We want to look at how the previous hourly candle has closed, and we want to enter a trade based on that on the 1 minute. And by the time indicators tell us to buy or sell, it's too late. So here's one that I used to try all the time. I was hoping for something magic to tell me when to buy and sell. And I'm sure that there may be people out there who incorporate indicators into their strategy, and maybe they are profitable from doing that. It's just not something that I do. I mean, look, there's 33,000 people who use the UT bot alerts, so maybe they are providing something, but for me, they're just not needed in my strategy personally. But let's say that we put this UT bot alerts indicator onto our charts, and if we go back here to where our entry was, we've already got all these buy and sell signals, which obviously don't make sense, but again, people may incorporate this in different ways. But by the time that we'd be looking to buy, which is there, we don't have any buy alerts, so we'd be waiting for an indicator to tell us when to buy, which is all the way up there. So by the time we get this alert, we'd have to be buying there, where price has already broken the high, it's already pushed quite a bit on the current hourly candle, and then the stop loss is too big for me anyway, because I have a maximum 10 pip stop loss and this is 11. So then there's no trading opportunity for me there, simply because I was waiting for confirmation that lagged. I should have been in exactly where I got into the trade, not where the indicator is telling me to get into the trade. And when I first started trading, I was looking for something like an indicator because I thought I cannot do it on my own. I need that confirmation of something else to tell me when to buy and sell. And that was actually doing myself a disservice. I wasn't helping my progress by trading indicators, because by the time they were telling me to get into trades, the trade idea had already gone, and I was potentially losing a lot more trades than I would have been if I was just trading by myself. And that is why it is key to have belief and just purely trade on price action. So if we look here at the FundedNext account that I am trading, we have made a profit today of $11, so nothing major, but it was also nice to trade with no indicators and know that I actually ended the day profitably because I was just trading based on price action. Now don't forget, if you are looking to trade with FundedNext, if you use the code on the screen, you will get 120% refund on your challenge. Now I know a lot of you are watching in the USA. Now, FundedNext have officially launched CFD accounts in the US, and again, you can use the code on screen now to get 120% refund on your challenges. As well as that, the prices are up to 30% cheaper if you are from the US. The link is in the description to FundedNext. So every month I will be picking 3 traders out of the Discord to get given a 15k Stellar Light challenge from FundedNext. You can join the Discord by clicking the join button next to the subscribe button. If you have any questions at all, please let me know in the comments, and thanks very much for watching.